Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be discussing upcoming Eurozone GDP data, the ECB meeting, and the outlook for the euro. So Rafi, March was a difficult month across Europe because its biggest economies were shut down due to the coronavirus. Should we expect the Eurozone's first quarter GDP estimate due on Thursday to be pretty bad?
Well, Maria, it's hard to see anything positive being found in the GDP numbers. On Thursday, we're expecting the Eurozone economy to have contracted by 3.5% over the quarter. That's likely to be a historical low, at least since the Eurozone records began. And the only positive that we're likely going to be able to say is the fact that it's not going to be quite as bad as China's figures. And that's only down to the fact that in China the outbreak did begin much earlier on, and in China it is now contained pretty much the virus outbreak, whereas in Europe it has spilled over into the second quarter. So this is only going to be just the start of the contraction in the Eurozone economy, as the second and maybe even the third quarter numbers could get even worse.
Okay, now regarding the European Central Bank, last month ECB policymakers launched a program to support the Eurozone economy, but it seems as though the initial amount may not be enough given that the virus crisis will not end anytime soon. What should we expect to hear from the ECB this Thursday?
Well, it is looking increasingly likely that the ECB will announce some additional measures. At the very least, we're expecting the ECB to say that they're going to start accepting junk bonds, or start including junk bonds as part of their asset purchases, just in case countries such as Italy see their ratings downgraded to below investment grade. Now, the ECB already has three programs in place. They've got the regular 20 purchases a month. We saw 120 billion asset purchases being announced at the beginning of March, and in mid-March, the most significant of all was that 750 billion pandemic emergency purchase program. Now it's this particular one which could be beefed up possibly by as much as 500 billion euros, which would take the ECB's asset purchases, total purchases for the year, well over to 1 trillion. And the pressure really is on ECB policymakers to do more. That's because if you look at the EU's response, they still haven't really been able to come up with any substantial fiscal stimulus, any substantial rescue fund. And even that 1 trillion that the EU announced, a lot of that has still to be finalized. So a lot markets are really counting on the ECB to once again step in and save the euro.
So taking all this into consideration, what reaction do you think we'll see in the euro?
Well, that could be a little bit harder to predict. Normally, when the central bank announces monetary easing, the currency does come under pressure. In this case, the euro could in fact be boosted from any extra stimulus coming from the ECB, because then that would mean the better times ahead for the Eurozone economy. It would relieve a lot of the pessimism surrounding the Eurozone outlook. But one thing, the other thing that we should be looking out for is possible signs that the ECB is maybe moving towards unlimited QE, like the Fed and like the Bank of Japan have done. Now, unlimited QE is unlikely to be announced this week, but any signs that policymakers are moving towards such a move, that could possibly weigh on the euro in the more medium term.
Rafi, thanks so much. And thanks for joining us at xm.com.